In this video, I'm going to share 5 steps on how you can start a hedge fund from scratch. Let's get started. Hey, it's Frank Nagy and welcome to my channel where we help financial entrepreneurs grow their business in the financial markets. If you enjoyed this video, then click that like button below. But first, what is a hedge fund? Hedge funds are alternative investments that can be defined as investment securities trading outside traditional investments like stocks, bonds, cash, or real estate. Hedge funds therefore employ a wide range of investment strategies to generate exceptional returns for their investors. However, to remain exempt from registering with the U.S. Securities Exchange Commission, the SEC, hedge funds are only permitted to accept investments from accredited investors, which are those who have a liquid net worth of at least $1 million or an annual income of $200,000. So why start a hedge fund? Hedge fund management has the potential to be very rewarding, not to mention lucrative. A management fee of 2% for all assets under management and a performance fee of 20% annual profits are included in a typical fee structure known as 2 and 20. So here are 5 steps for starting a hedge fund. Step 1, having a cutting-edge strategy. Hedge funds are first broken down into distinct investment strategies, which is further refined into separate investment styles. Every fund must have a specific investment style and strategy. No 2 funds are alike. However, funds can have differences in how they trade and what they trade. But here are top trading strategies that most hedge funds utilize today. Equity directional, emerging market, event-driven, fixed income, managed futures, and multi-asset. Whatever your strategy or style is, it's important to note that you will need to properly describe this in your offering documents. Your hedge fund consultant and your attorney will tweak any wording so that it will not appear to be misleading or false. Step 2, decide on a jurisdiction. It's important to understand options when choosing a jurisdiction where your hedge fund will be domiciled. For example, if you choose to set up your fund in the United States, you are limited to only US-based investors. The state of Delaware has been the home of almost all hedge funds domiciled in the US. If you decide an offshore fund, then you might consider the British Virgin Islands or the Cayman Islands. They are one of the most popular choices when setting up an offshore hedge fund. Typically, an offshore hedge fund caters to non-US or foreign investors located outside the United States. Certain exempted US investors are also allowed to invest in these offshore funds, such as pension funds. Step 3, deciding on service providers. There are several administrators, auditors, and attorneys that want to work with your new hedge fund. However, some costs and services need to be factored in your expenses when considering bringing on these providers. For example, some fund administrators can be costly if they have a recognizable, notable name. Look for administrators that will work with your startup fund by keeping their monthly fees low, and most admins will raise their fees as your assets grow, which are the people that I deal with. Auditors are not necessarily a requirement, but is the industry standard. Besides, your investors will demand it. A local auditor who specializes in fund management will run you about $3,000 a year. But if you want a name brand like the Big Four, prepare to shell out anywhere from $10,000 to $25,000 and up. Having a good attorney will not only review your documents, but will advise on changes in laws which can affect you and your fund. If you work with a fund advisor who will help prepare your documents, be sure to have a qualified securities attorney review them before approaching your investors. Banks and prime brokers are in the business of developing relationships. They offer margin, clearing and settlement, investment research, as well as capital introduction. Most traders and managers have already established relationships with a brokerage firm, and I suggest reaching out to them to see how they can enhance their services by bringing on your new hedge fund. Step 4, seed capital. It's important to know that your hedge fund to be well capitalized. here's a short list of avenues to approach. Family and friends, high net worth individuals, financial advisors, family offices, fund of funds, foundations, pension funds, and investor networking events. When approaching these sources, you will need to have properly drafted pitch deck, offering documents, and any background profile on you and your management team. These are serious players and you don't want to look like an amateur. Also, be cautious of individuals who wish to introduce investors to you only to earn a finder's fee. It is illegal to pay a finder's fee for capital introductions in the US unless the individual is licensed security broker with a brokerage firm. And step 5, decide on a launch date. In my years of setting up hedge funds for clients, I have seen funds launch after a certain amount of seed capital is raised. I've also seen funds launch as soon as the first subscription is approved and signed. This all depends on your minimum investment amount and your trading strategy. It's best to consult with your hedge fund advisor on this one. Hiring an experienced hedge fund consultant like Frank Nagy Financial Services will greatly reduce the burden of setting up your hedge fund. A good consultant will make appropriate introductions with the proper service providers that will best suit your hedge fund needs. If you're thinking about starting a fund, I recommend my book, The Ultimate Hedge Fund Guide. Click on the link below in the description box. And if you haven't yet subscribed to my channel, click on that subscribe button below so you can get updates when I post my next video.